Okay, now I'm also seeing some discussion on junior trends. All right. So with that, we want to go ahead and do it. And this is one of those points where I told you guys that some of you are going to have to rewire yourselves, because for the last couple months, I've been looking for really solid, steep, if I'm going long, steep uptrends. Okay, but that when we're going ahead and looking at these speed line trades, that we're going to go ahead and not require so much intensity. All right, because keep in mind here, remember what I showed you. Here's the 5-minute chart, right? Look at that hourly. Is that hourly chart not in a nice uptrend back to this point from here to here? Is that hourly not in a good uptrend at that point? Is that 30-minute chart for all these bars here not in a good uptrend from here to here? They are, aren't they? So actually, when this 5-minute had the little dip down and pops back up in the direction, it was actually a nice pop-up in the direction of the overall trend, wasn't it? Okay? And I'm not trying to trick you here. I'm trying to go ahead and teach you so you really learn this. Okay? So please, you guys, I said, many of you have been with me for a long time, and you've actually become friends. I'm not trying to pull one over on you and trick you into saying the wrong thing. I'm just trying to get you to think here, because you that are answering these questions, and that are paying attention and are really engaged in this process, are the people who are going to retain this the best. Adult learning theory has proven that time and time and time again. By answering the questions, being engaged, you're going to learn more. Okay? And I'm doing everything I can to teach you on top of it. Look, I'm on example number 8 of 50. And we've already been going for like 2 hours and 15 minutes. I know I kind of blew my time there a little bit. But this is the best way to learn. And so I just wanted to keep that in mind. So there we had a trend resumption there. Volume dries up, okay, but the MACDs are doing what? The MACDs are cooking in the direction of that trend. And here it's even resuming back into the direction of that trend on that one. And then, of course, kind of a mixed bag on the hourly, but the RSIs, for the most part, minus the hourly, because the hourly was fairly junior, is basically neutral as far as I'm concerned. But the 5, 15, and 30 were good. The trends on the hourly and 30 were good. And the MACDs were cooperating, most notably on the short terms. So we go ahead and get that trend resumption, and voila. Okay? All right. That's right, Stephen, and that's what I'm looking for. I'm looking for that affirmation, of a launching pad. All right. Next example here. Now, keep in mind what we're looking at here is this bar, this bar, this one, and this one, where the vertical lines are. Now, what do you see here? So hopefully this is going to really help you on this slide. That's why I pulled it together. Okay, excellent. So you guys were going ahead and seeing it here. This is a mess, all right? Why is this a mess first and foremost? Okay, I'm seeing all the answers there, so very good. The bottom line is this was an absolute mess because the hourly was down, and you're trying to take a long side trade into the middle of a flat 30, a flat 15, and a down hourly. You're trying to go long. You're going long as the first bar goes ahead and nails resistance, and there it is again, gang, my resistance level, 999, 1000. Now, when we were live trading together, you guys know how important I was telling you this resistance level was, okay? And so here now, you've got this long thrust bar that thrusts right into the middle of resistance, okay? So it looks like it's setting up really well. It hits resistance, and what did I just get done telling you a few minutes ago on the other bar? I said if you've got a situation where you're basically downtrending and sideways, what did I tell you would happen when you go ahead and you hit resistance? It'd be, and many of you answered. You said it'd be a place where you'd look to exit, look to get out. Well, then why would I go long into the middle of that, firefight? That's just, that's asking to have a grenade hit you. And so, exactly. So, see, you guys are getting it. You're getting on target here. I like it. All right, let me go ahead and get the next one. Okay, next example. Tell me your thoughts, gang. And you know what? I'm sorry. I should check the webinar too. I know that some of them people. Yep, that's what I thought. Tim, hey, sorry about that, Tim. I know you're out there on kind of on the webinar here. Okay, under 30% RSI. Good. So keep up the answers and keep up the good work, Tim. All right. Very good. Very good. That's right. Exactly. We've got it's very much the same as the last chart, different time frame. Okay. Um, it's basically that same hourly downtrend you were just looking at back here, but it's a short-term blip to the upside in the middle of a long downtrend. So what did I just get done saying? Here we go, proof positive once again on this. When you take a short-term uptrend, no matter how good it may look, here's a fish hook. Great, you may get that little itty-bitty pop-up, but by the time you hit resistance, you need to be looking to exit that. Okay, so was there a profit potential on this? Yes, there was. Is it the kind of thing that most people should be looking at trading? Well, probably not most. So, you'd be one of those quick, that's right, Tim, maybe a quick profit kind of thing where you're scalping. But in the grand scheme of things, this is, for a more conservative trader, in my opinion, for my trading, it's more of an aggressive move. And so you should keep that in mind if you want to be a little more conservative. So look at that. Hourly down, you do get the move, but as soon as it hits my resistance level, whammo. Okay? All right. What do we see here? Okay, Scott and Stu have gone ahead and Tim have interjected. Nope. Remember now, gang. Hold on. Nathan, it says close above the 20. We're talking about this bar. I hope all you guys can see these lines on each of the bars. So we're talking about this bar here, and here, and here. Got to focus on where those vertical lines are. Okay. So where this is focused on, this is a good trade. This is the hourly chart trending down, 30-minute trending down, 15-minute trending down. You had a trend resumption. There's the loop-de-loop. See, moves back in the direction of the trend. Has 2 bars down to the downside. I mean, it doesn't get any better than this, gang. 2 bars down to the downside, heavier volume, a light volume pullback, RSI down, MACD down, okay. On the shorter term, they're rising a little bit on the 30-minute chart here, okay. So that says, hey, maybe you're going ahead and starting to bottom out here a little bit. But nonetheless, before this thing bottomed out, it had 2.5 points of profit potential buried in here. Okay, so let's review that by the numbers again. All the time frames were down back here. It had the loop-de-loop, the trend continuation, 2 heavy volume bars down, light volume pullback to speed lines around the 99 area, and then it dropped down below 96. Okay. Chris, this was ending. If you look at this was ending. Remember what I said, I don't like to enter a trade the last 30 minutes of the day. Well, that's right about, approximately in here somewhere. So you're kind of near that cutoff point. But even if this would have become a no trade, because let's say it would have been after 3:30 for me, go ahead and it's 3:30 Eastern time, 3:30 Eastern time, 2:30 Central time. Okay, so even if this would have gone ahead and been a no trade, at a minimum, people need to go ahead and recognize this pattern as a solid pattern, because we won't just see this at 3:30 in the afternoon or later. This pattern will manifest itself, 1:30 Central Time, 11:30, 10:30 Central Time, 9:30 Central Time, whatever. So good cautionary note, because the time was close here. Okay, no question about it. But no, so it's a good note, Chris, and just keep in mind that the pattern itself, though, is solid. Actually, Richard, there's no reason for waiting for the additional bar. There's nothing wrong from my perspective to go ahead and take it here. I went ahead and just when I was marking the chart, I went ahead and ended up focusing on this bar here, which was the last bar before the push down. But in the real world, what you're actually looking at there, from my perspective, is going ahead and the first bar pullback would be all that I would expect. I would have no illusions that it's going to get to the next one. But if it does get to the next one, then there's your scaling opportunity. And somebody said it's about 20-period moving average. This price right here is $9.99. Half a point later is the slow speed line, and half a point after that. So there's only 1 point difference from here to here. So then you got to ask yourself, do you want to scale in or try to scale in at each of these 2 points as well? Go with what you got, or just say, well, if it gets back to the 20, since it's only 1 point away, I'll wait till it gets to the 20 and do another scale in. See what I'm saying? There's only 1 point difference really from here to here. So do you actually implement your second scale in at the speed line? Remember I talked about that earlier with scale in. Sometimes they're going to be so close. Your backup, your support to this trade is only 1 point away in the middle of a macro downtrend. So that's why I wanted you guys to consider knowing where the short-term, the long-term speed line is in relation to the 20-period moving average. Because, like in my case, I would probably elect, and I would have never gotten filled, unfortunately, but I would have elected to just put my second trade in, because as you guys know, when I do a scale in the direction of a trend, I usually do it approximately a point away. And so I likely would have had my order sitting up there closer to the 20, so I wouldn't have gotten a scale in. So it would have been the initial entry only. But good for you guys to see how that works in relation to the notes I gave you earlier. Okay. All right, next example. What do you see here? And this one is very intentional why I picked this slide. Let me move up the chart here a little bit. Ian, I'm sorry, what's a KBR? Key bar, or do you mean key reversal bar? Or? Okay. Okay, anybody see anything else? All right, David talks about being near one of my support levels. Okay, lots of good answers here. All right, let's go ahead and I intentionally put this one in here. Again, these are all very recent examples, and that's why some people go back and look. But nice strong downtrend, check. Nice strong downtrend on the 60 and the 30. Okay. The 15, nice strong downtrend. However, the speed lines are starting to become Swiss cheesy. They're starting to roll over each other, and in fact, the shortest term speed line actually, was positive on the 15-minute chart. Okay, that's a danger sign. The biggest thing, though, is, and fortunately people mentioned this, we were trapped between my support and resistance levels. And what did we talk about earlier? About not wanting to take the resumption trade if we're right at a resistance level or a support level. Okay, I don't like to do that. Okay, so I like the fact, what do I like about it? I like the fact that, okay, the market was down, rallied back up, started going ahead and resuming the trend to the downside. Yay. Okay, that's good. MACD rolling over. RSI below 50. Okay, excellent. Wait a minute. I'm sitting here bouncing off of my 1,000 to 999 level. Now, just in the examples we've shown, let alone all of you that have been here trading with me here the last, several weeks that went ahead and saw 999 and 1,000 as important support resistance, you'd be going short right into that important level. So very good for all of you that mentioned that we acknowledge we're in a downtrend, but at the same time, we were at support. And that's what I told you. I don't like to take the support. Now, there's one other thing I didn't see anybody mention. So I'm just going to go ahead and point it out to you. Okay, and that's another reason I took this chart and wanted it on here. Look what happened. Remember what I told you, Peter? You and I were talking earlier about this. Look what happened with this. It rallied up, hit my resistance level, came all the way back down and closed right there with the 20-period moving average. Everybody see that? It faked people out, hit my resistance level, and then turned around and let the big major sell take place. Remember what I told you about my stops? That's why, for me, closing, in this case for short, closing above the 20-period moving average was important to me. You notice it traded against it then about a point or so, came right back down and closed below it, and then the drop happened. So that was the only other thing I wanted to go ahead and point out to you there. But looks like several of you are starting to get it here, so that's good. All right. Let's go ahead and go to the next one here. What do you see, gang? Okay, getting a lot of good answers here. All right. Very good. Taking it by the numbers. Strong downtrend, hourly, 30, 15-minute charts. Okay. Here, even on the 15-minute, remember over here we had more danger because the 15 was turning up, didn't we? Remember that? The 15 was turning up back over here, but not on this trade. On this trade, it's still down. Okay? So this one is still down. And then we went ahead and had the 5-minute chart. It was trading down, rolled back up, and resumed the direction of the trend. Okay? So this one here, you have to ask yourself, I just want to point out that there's a risk associated with this one, and the risk is that you only have a little bit of profit potential before the support, and that's fine. At least it's up here instead of the last example where we were looking at when it was right into resistance or support. So this one at least has profit potential. It had about a 1.5 approximately of profit potential, 1.25. So at least there was a reason to go and be in there. That if once you started making money on it, then you move the stop down, and then you could have perhaps participated in more of this. Okay, but there was more air between this and here than there was on the last example. The other thing I want you to go ahead and note about this one is that there's more air between here at 101.50 and 103, 103.50, depending on if you're looking at the 18 or the 20 period moving average. So there's up to 2 points before you get to the 20 period moving average here. Okay, so you have to ask yourself, okay, great, I got resistance right above me. Everything's coming down on this thing, but I'm up to 2 points away, 1.5, 2 points away from my 20-period moving average. Do I want to maybe, and only a 1.5 away from my the top edge of my support, do I want to maybe scale back my size? David, day-to-day conditions, no. But in this case, we had a extremely strong. So, David, if let's say the hourly, the 30-minute, 15-minute are trading sideways, no. This is because of the extremely strong nature of the downtrend. Okay, this thing was in death spiral mode. So we would look at it in that case. That's much more ideal. The 5-minute chart going ahead, and also the 15-minute starting to rise, showing us that we're probably closer to a bottom is what's happening there. You're starting to get a positive divergence starting to cook there. So if you're going ahead and building a rule around it, David, you got to say then this kind of trade is only good if you've got strong downtrends on, the higher time frame charts. So good question. And again, even in prior to that question, we talked about scaling back a little bit for two other important reasons. Okay, one, a point and a half, 2 points away from the 20, and two, a point and a half away from support. Okay, three total between David's question and the two other things I mentioned here. Three very good reasons, and that's why we're looking at real-world examples, not just those pretty little examples in a box. We're looking at the real-world examples of, the variations of the setup. Okay. Sure, Nathan. We can go ahead and take a quick break there. Sorry, gang. I know I'm just going and going and going here. We've been going for, I don't know, I guess we're quickly approaching 3 hours at this rate. Yeah, let's go ahead and everybody just take a quick break. I said we're on example number 13. I had 50 slides, so I'm not sure how that's going to work, but everybody take a real quick break here. I'm showing 11:11 my time. Let's take like a 4-minute break or so, and then we'll get back to it. Okay, David, sleep tight there. Good night to you in Australia, and we'll look forward to seeing you tomorrow, sir. I know it's hard for our Thailand, Singapore, and Australian colleagues. It's very late. Okay, Vaughn. Well, thanks for being here as long as you could. And by the way, Vaughn, thank you very much for offering to help me this morning. I greatly appreciate it. Your microphone will come in handy in the future when you want to ask me questions. If I have the room open up earlier in the morning and you're here and you want to just jump on the microphone and ask questions, you're more than welcome to. So thanks again for your offer to help me this morning. Okay, I'm going to take Okay, Caesar, thanks for staying as long as you could. I know you've got work too, so you have a great day. Okay, I'm just going to go ahead and mute it for a moment, and then and that should take care of between 10:30 and 11:30, the people that got to go to work and go to sleep. Okay, Jin Young, there you go. Good night to you, and we'll look forward to seeing you tomorrow. I said, appreciate all you guys over in the Far East. I know it's extremely late for you, midnight, 1 o'clock, 2 o'clock in the morning, and later in some cases, I suppose. So I appreciate you guys staying as long as you guys could, and we will look forward to seeing you back tomorrow morning. Oh, you're absolutely welcome, Jin Young. Like I said, I understand what it's like in Singapore and Australia, and that I completely understand. But you're with me here for a long time, Jin Young, so you'll be able to catch up and we can talk about it more tomorrow in the live room. Paul, I got your message. Thank you very much. Um, we'll catch up later.